Hello, listeners. Welcome to the Morning Market Update. This podcast is powered by AI, and I'm your host, Joe.
And I'm Sarah. Today is Monday, February 9th, 2026. It is a massive day for global markets with historic milestones and significant volatility across the board. Let's dive in. We start with the U.S. markets, where we are seeing a bit of a morning after hangover. Last week was monumental as the Dow Jones Industrial Average finally crossed that psychological 50,000 mark, a historic high that had investors cheering. However, as we look at the pre-market futures this morning, that euphoria is cooling off. S&P 500, Dow, and Nasdaq futures are all slipping slightly. Traders are clearly catching their breath after a week where big tech saw a massive $1 trillion sell-off and subsequent rebound. We're also seeing a lot of caution because of the macro calendar. The January jobs report and new inflation data are looming large later this week. In the mid-cap space, the Russell 2000 is showing similar hesitation. One of the biggest individual laggards this morning is the AI player Monday.com, which saw its stock plunge following an earnings report that failed to live up to the sky-high expectations currently placed on anything touched by artificial intelligence. Hedge funds seem to be leading this cautious charge. Data shows they've added record short positions on U.S. stocks recently, specifically targeting companies where AI might disrupt traditional business models. So, while the 50,000 headline looks great on a hat, the underlying sentiment today is definitely one of wait and see.
Turning our attention north to Canada, the TSX is navigating some choppy waters today, heavily influenced by the global energy and material shift. While the broader Canadian index is fighting for direction, the big story for Canadian investors is the massive consolidation in the energy service sector. Transocean has agreed to buy Valaris in a $5.8 billion all-stock deal. This is a huge signal for the offshore drilling market and will likely ripple through the energy-heavy TSX. We're also seeing a significant move in the material sector. Gold has pushed past the $5,000 mark, which is providing a foundational cushion for the major Canadian miners. However, it's not all smooth sailing. The Canadian market is keeping a very close eye on the escalating trade rhetoric from Washington. With President Trump threatening new tariffs on countries supplying oil to Cuba, there's a renewed sense of anxiety regarding how North American energy flows might be impacted by geopolitical pressure. We're seeing the loonie trade with some volatility as well, caught between the strength of gold and the uncertainty of the U.S. dollar's dominance.
Moving across the oceans, it has been an absolutely wild session in international markets. Let's start in Tokyo, where we saw a historic Takaichi triumph. Following Sanai Takaichi's landslide election victory, the Nikkei 225 surged to a record 56,000. Investors are giving her the benefit of the doubt on her ambitious spending plans, and the yen actually strengthened on the news, which is a rare double win for Japanese assets. Over in India, the Nifty 50 is showing resilience, particularly in the agricultural sector. Chicago soybean oil rallied after India agreed to cut duties on U.S. supplies, a move that's expected to increase trade volumes significantly. In Europe, the FTSE and DAX opened with eyes firmly on the pharmaceutical sector. Novo Nordisk shares jumped as much as 8.6% in Copenhagen, their biggest gain of the year, after a major competitor, Hims & Hers, announced it would stop offering a copycat version of the weight loss drug Wegovy. Finally, in the currency and crypto space, we're seeing some de-dollarization headlines. Chinese regulators have reportedly told banks to scale back their holdings of U.S. debt, which has sent treasuries falling and moved Bitcoin into a volatile range. Bitcoin actually touched 72,000 on the Japan news before retreating towards 60,000 as traders positioned for downside protection.
Let's get into the major corporate stories hitting the wires in North America. First, that Transocean and Valaris deal I mentioned earlier is the talk of the town. Valued at $5.8 billion, this merger of deepwater rig owners suggests that the peak oil narrative might be premature. In fact, Vitol, the world's largest independent oil trader, just pushed back its forecast for peak oil demand, citing a slowdown in electric vehicle adoption and a global shift toward energy security. Second, we have to talk about Meta. The social media giant is back in the crosshairs of European regulators. The EU is threatening measures to force Meta to reverse its WhatsApp AI policy, citing antitrust and privacy concerns. This comes just as Meta stock was trying to stabilize after a bruising week for big tech. Third, MicroStrategy continues to be a high beta play for the ages. Michael Saylor's company saw its stock surge 26% as it continues its aggressive Bitcoin accumulation strategy, even as the crypto market faced a weekend flash crash. And fourth, keep an eye on the Super Bowl 60 aftermath. Interestingly, Coinbase was the only crypto firm to run a major ad this year. This is being viewed by analysts as a shift from retail hype to institutional infrastructure, as the market matures beyond the celebrity-driven ads we saw a few years ago.
Now, let's look at the international corporate landscape, which is equally eventful. The standout performer is undoubtedly Novo Nordisk. By successfully defending its moat against copycat versions of Wegovy in the US market, the Danish giant has reclaimed its status as the darling of European pharma. Meanwhile, in the tech sector, we're seeing a massive debut in Hong Kong. Montage Technology, a Chinese chip designer, saw its shares soar over 60% on its first day of trading. This $902 million IPO proves there is still an enormous appetite for domestic semiconductor capacity in Asia, regardless of the trade tensions with the West. In the energy sector, Nordic power prices have jumped to their highest levels since the 2022 energy crisis. A severe cold snap combined with low wind levels has squeezed supplies, putting pressure on industrial players in Northern Europe. We're also watching a bit of a crisis in South Korea. Bitham, one of their largest crypto exchanges, suffered what's being called a $44 billion blunder, an error that has put South Korean regulators on high alert and is weighing on local sentiment. Lastly, in the UK, political instability is back on the menu. Prime Minister Keir Starmer's leadership is reportedly teetering, which has left the FTSE 100 feeling a bit rudderless despite the positive momentum in the global pharma sector.
Wrapping up with the big picture, economics and geopolitics. The dominant theme this morning is the shifting status of the US dollar. While IMF Managing Director Kristalina Georgieva is downplaying the dollar's short-term variations, the news that China is actively urging its banks to dump U.S. treasuries is a major shot across the bow. This de-dollarization move, coupled with the Trump administration's aggressive tariff threats against Cuba and its oil suppliers, suggests a more fragmented global financial system is emerging. Investors are increasingly looking for neutral settlement layers, which explains why we're seeing so much money flow into alternative infrastructure like Liquid Chain and other Layer 3 crypto environments. Domestically, all eyes are on the Federal Reserve and the upcoming labor data. If the jobs report shows the market is cooling faster than expected, the soft landing narrative might be replaced by recession fears, which would explain why hedge funds are currently piling into those record short positions we discussed.
To summarize the key takeaways for your trading day, first, the Takaichi trade is real. Japan's new leadership has sent the Nikkei to stratosphere levels, but watch for yen volatility. Second, Novo Nordisk has proven that regulatory protection is a powerful value driver in the weight loss drug war. Third, the Sell America trade being practiced by Chinese banks is putting downward pressure on treasuries, which could keep interest rates higher for longer than the market likes. And finally, the AI trade is becoming increasingly discerning. Companies like Monday.com that don't deliver a perfect beat and raise are being punished severely. It's a market of show me the money, not just show me the tech.
That wraps up today's update. I hope you gained useful insights to help navigate these volatile markets. It's certainly going to be an interesting week as we watch those 50,000 levels on the Dow.
Add your thoughts in the comments and follow for more such updates. We'll be back tomorrow morning to see how these stories develop. This is Sarah.
And Joe, signing off. Have a productive trading day.